welcome to the second in our 3LT Playbook webinar series. I'm Charlie Bathgate, managing partner of Sanlucci Trading and sidekick, I guess you could say, to the man himself, Sanlucci, Anand Sanghvi, presented here with repping the logo shirt. We will, I'm sure, get questions about that in the Q&A. And what we are here to talk about is a continuation of our 3 Laws of Trading webinar series. The first one we did last week was about the first law of trading. These are the laws that Lucci has used to sort of distill down the most important parts of trading, the most important concepts that have determined his success and his growth as a trader. We distilled them down into 3 specific laws, and we created this playbook all built around them. So last week we did a deeper dive into the first law, and today is about the second law, which is called learn the noise. And this is really about understanding your sources of information, the ways that that the masses are pushed into trades out there, and how to really understand where you're getting the best information from, and what the things that are affecting your behavior, and then how to look at how media, how Twitter, how the noise is potentially pushing larger groups of traders into positions that you can profit from, but really separating yourself from that herd mentality that really gets you screwed over so badly when you're trapped in a part of it. So we're going to go deep into that in the webinar here in a second. If you guys have questions, please just drop them in the chat throughout, and we will do a Q&A at the end. So just go ahead and anytime you have something that you want to bring up, let it rip. We'll answer those questions. And then if you haven't already, we highly suggest you go and check out www.3ltplaybook.com. If you're watching this on the recording, go check that out. It is a really, really good online experience, videos, written text. It gives you a very, very good taste of what we're all about here with Sanlucci, and like I said, distills down those 3 laws for you so that you can check them out. So, all right, Luch, let's get started, man. We talk about, like, learning the noise and separating yourself from the herd. Do you want to give like a quick, 30 seconds and just kind of summarize what this herd mentality is, how you've seen that play out, and the importance of separating yourself from it?
Yeah, I mean, first of all, let's ask the question out to everybody else. How many of you guys have felt like you've been part of the herd and you kind of were late to a trade that you felt emotionally attached to, that you couldn't get out of, or you didn't want to get out of, and then you kind of just got rolled over? How many of you guys have been a part of that, or have that happen to you as well? And by the way, you guys would all be lying to me anyway if you didn't say yes to this question. I've been a part of it. We've all been a part of it. And it sucks. It sucks. But it needs to happen, because there's like a couple realizations after the fact. Once you are a part of it, you start realizing, like, okay, what happened? Like, what was it? The emotion that kind of led me astray? Was it what I was reading? Was it the person who gave me the tip in the first place, or the source of the tip? Like, what are the layers here that you need to kind of pull back to get to a place where you can either actually profit from something like this, or make better decisions, kind of control your emotions here? So that's kind of what Law 2 is all about, just understanding why this happens, and the business of hype. The business of hype is in all markets, right? They're in all secondary markets, and this is the largest secondary market, I mean, next to obviously Forex and some of the futures markets out there. But this is what this is. This is a large secondary market that is pushed around by a lot of perception. And perception can be easily influenced by things like the media, by things like Twitter, by things like the news, whatever the case is that you're that you're talking about. Hype can be influenced very easily. And what happens in the stock market, when you look at these things, you'll start to see charts move based off of this perception either growing or disappearing. And it's like your understanding of how it works from the and I don't want to bring it to science here, but more or less from the molecular level, right? From the market structure level, from who's actually involved in these, in these particular moves. In, what's the float out there for the particular stock? Some of you guys don't even know what a float is. How many people are short a particular stock? And when all of these things kind of converge, you have some pretty interesting situations that happen in the market, and they happen every single day, with or without you, or whether you're trading with your best emotions or not. So that's kind of what we're going for here. And I know that was totally longer than 30 seconds there, Charles, but
No, no worries, no worries. I mean, one of the things I think you're hitting on that we talk about is, and you talk about this in the video that's in the playbook, is this concept that human nature, up to like our ancestors were rewarded for staying a part of the tribe, right? Doing what everybody else does. And you give the example of being at a stoplight and you're sitting there and the car next to you starts inching forward, right, Booch? And then you start inching forward, you're not even thinking about it, you start moving with it, right? That's like built into our nature, is to want to mimic the behavior of people around us and to want to, so that we fit in, so we stay a part of the tribe. Because if you think about evolutionary biology, I mean, that was how we made sure that we had access to resources and that we were safe at any given time, right? If you left the tribe, you got killed. Now, in the markets, that's the kind of behavior that gets you killed. It's the exact reverse of what you want to do. And it's there's such an innate drive in us to want to use the information that's presented to us publicly and to be able to just act on that. And that, to put it simply, will screw you, right? So I think you said you had there was a couple examples that you felt like were pretty good instances.
Definitely.
How public perception was being driven to make a trade, to push people towards a trade, and in reality, the best trade was to do the reverse of that.
Sure. And this all depends on everything is timing, everything is timing in the market. And that's also couples very well with law number one. Law number one is understanding the fucking market to begin with, right? Understanding tape, understanding bid and ask, understanding when something has topped out, understanding when something has bottomed out. What is the type of price action that you're going to be looking at, but law number two is to understand conceptually, like, there's a lot of manipulation of perception through media that we all just genuinely just accept subconsciously, that we don't even know what we're doing here. And a lot of us make a lot of mistakes here in the markets when it comes to, buying or selling, the timing of these things, and then even being on the right side of the trade to begin with. So I do have a couple examples here. Charlie, you want to pass me the little the presenter thing there?
Yeah, give me 1 second while I figure out how to do
that. I got some great examples here for you. The first one we're going to start with is, of course, and I know you guys have all traded this as well, is the TLRY. Okay, so Charlie, let me know if you can, let me know if my screen is looking okay.
Yep. We got you. Yep.
Okay, so you guys can see here a nice chart here of TLRY. This is basically what we're looking at. And how many of you guys were a part of this IPO, or maybe even a part of this stock, or even traded, this stock? I'm going to give a great story that we kind of hinted towards it in the playbook, but I'm going to give you a nice play-by-play on this, and then I'll give you a couple more here when it came to we're going to talk about Bitcoin here as well. But this IPO, this was a cheap IPO. This was a cheap IPO. And again, it's in the cannabis industry. They're a distribution company, and they're going to do a lot of partnerships in the space. And then as this whole move was happening, during the month of October, during the month of September especially, there were so many partnerships that were announced that either the deals weren't solidified, or even if they were, it didn't even freaking matter. There was one particular story in October that really launched some of the initial hype on this particular stock, was the distribution deal in Canada, basically, and that recreational pot will become legal for adults in Canada. And then they got a distribution deal And then we were somewhere at around like 150 bucks, 140 bucks, 150 bucks, somewhere around there. And then every single day, I don't know if you guys remember this, but there was a new article on how TLRY was the stock to be in for the cannabis industry. There were new partnerships that were being announced. There was one with Constellation Brands. This was for the alcoholic beverages. So now we were talking about, oh my God, now we're drinking a beer and we're also getting high off the thing, we're getting high off the thing as well. Coca-Cola here, there was there was news there about this as well. And this thing just went parabolic here. And at around 150 bucks, somewhere around there, my boy calls me up and he works at the Gucci store in Copley Mall in Boston. It's one of the most, opulent malls in the Boston area. It's the only place where there's a damn Gucci store anyway in Boston. I think there's maybe one other, and I don't know where the hell that is, but that's the only Gucci store in Boston. So this kid comes in there and it's like, yo, he takes a look at two mannequins and he's like, give me that and give me that, right? And nobody buys outfits from Gucci like that. You know what I mean? You come into Gucci, you buy some slides, you might get like a wallet or something. Maybe you get a t-shirt or something, but you damn sure don't go walking out like a fucking mannequin. Okay? So this kid was like, yeah, here's 20 grand. I want to look like these two mannequins right here. And my boy's like, dude, what's going on with you, man? And he gets some information from him, and the kid proceeds to tell him that he made all this money in TLRY, right? So the guy calls me up, my boy calls me up, and he's like, dude, take a look at this stock. I knew about weed stocks. I didn't know about this particular one until literally it hit like 120, 130, 140. And then 2 days later, while also I'm hearing, a lot of this news come off, the stock was like running towards 180. My daughter's mother hits me up and says, yo, should I buy some weed stocks? One of my exes hits me up and says, hey, let me go ahead and buy some weed stocks. And I'm looking at this situation and I'm like, okay, these people have never had a brokerage account, and I know this because they asked me, how do I buy the thing, or when they open up their Robinhood accounts, they couldn't even get access to these particular stocks because they weren't open for weed stocks at the time. I don't know if TLRY was or not, but either way, they didn't know how to buy these things. So they were like, yo, should I buy? And I'm looking at the price of the stock. It's like two and change. And then it opened up at 300. And then I think there was some news that came out or something like that. And it ended up at around like 260, 240 or something like that. I shorted everything, whatever I could get my hands on. And unfortunately, it was difficult to get shares short. But when you see these kind of parabolic moves, they happen because, number one, there's not that many shares outstanding, so there's a low float on these things. This one was okay. There's a shit ton of people stuck short as well. And then you got everybody talking about buying this stock because it's the next, it's the next thing. And I want to walk into the damn Gucci store and buy me those two fucking mannequins too. And that's the point where things just usually fall apart for people. Okay. And if you take a look at where the stock is now, nothing has changed. So I want to ask you guys this question, just to make sure you guys are paying attention here. Nothing has changed in terms of what is going on in the stock. All these partnership deals are still on the table. They were always still on the table. But I want you guys to tell me, how come when all of this stuff was happening and the hype was there, the stock was worth 240 bucks, 250 bucks, and now the street values it at $41? Okay? I'm trying to ask you guys, like, nothing has changed on this stock. The stock still has the same, the deals on the table. It's still making money. It's still doing what it's doing. How come you have such a drop in valuation here? Okay? And I'm asking you guys this. What do you guys think? Anybody? Okay, Irvin is saying the Momo is gone. What else? What else we got? Garrett here is saying people pumped it up and then just dumped it off. Okay, but it's easy to say that. But we're talking about literally millions of dollars, hundreds of millions of dollars in valuation. Okay, So when this happened and the stock was worth whatever, 250, 260, $300, the valuation for this company is through the freaking roof. But it's justified at the time because the hype is so much, right? There's plenty of buyers out there that are willing to scoop up any little supply that is out there. So if you go back to law one, understanding price action, simple supply and demand. Honestly, anything about valuation, anything about the hype, anything about these articles, these media, the business of pumping up that hype, anything that you see on Twitter, whatever it is, it doesn't mean anything, okay? Because at the end of the day, if there's way too many of these buyers sitting up here at the top of this move, and all of a sudden that bid drops out and there's nobody to sell to, and this thing just craters here. And remember, it cratered in 2 days. You know what I mean? From $300 to literally $100 freaking dollars, okay? And you're talking about size players too that are in this, retail players, shorts getting squeezed, shorts trying to get back in. Imagine all of that hitting the tape at one time. What does it look like? What's it look like? Okay? But the initial part is just the media and your friends and the people that you know, maybe the gurus that you follow, anybody that you follow on Twitter. This is what you see. Okay? I'll give you another great example. And we won't even go through this with the with the chart like this. But Beyond Meat, of course, you guys are all looking at this. How many people has told you in the last, let's say, week, couple of weeks, or a month, that this is the same as TLRY and it's going to go to $300? How many of you guys have heard this? I can tell you exactly how many times I've heard this. Why? Because I counted. I fucking counted. Go ahead and tell me how many people have told you, or how many people have you seen say that Beyond Meat was going to be the exact same thing as TLRY, and it's going to $300. How many people have you heard say this? How many times have you seen this out there? What I'm trying to say is that whatever the hype is, whatever the easy thing is to say, whatever seems to be the mode of transportation, okay, the thing that everybody accepted, aka Beyond Meat is going to $300, okay, it's exactly like TLRY. Whenever I hear these things, this is when I know these things will not happen, okay? Because again, whatever the prevailing sentiment is, whatever the hype is, it is natural. It is just a natural byproduct of the emotions from the people that get involved in these things, that they are attached to those emotions. And when they are attached to those emotions, it's easy to push behavior. It's very easy to push behavior, okay? Now, I haven't figured out how to physically push behavior, but the machine that is media, the machine that is Twitter, the machine that is your behavior, all of it just gets dumped out onto the street. We all accept it. We see it even in political landscapes. Everybody accepts a just kind of a massive concept that just kind of drapes over everybody, and you hear everybody say the same thing in conversation. X, Y, and Z about Trump, X, Y, and Z about whatever, because everybody's reading the same shit. They're all reading the same shit. And if they're reading the same shit, they're reacting off the same shit, they have the same behaviors and the same emotions. And that's kind of how we create this business of hype. And in reality, the real money is, how do you move the herd, right? And none of us are large enough to do this, but it is kind of an interesting concept. And when you look at it from that perspective, then you start to realize what the business is about, and then you start to realize like what your place is in this whole world here. Charlie, you want to come in and chime in?
Yeah, so I was just going to say, I think that one of the things that we're talking about is there's two sides of this. One, right? One of them is tactical, like where you're getting your sources of information from, and really looking at the incentives of the source of information that you have, and understanding why would they be, like, if they put this message out there, what do they get in return, right? So that's one part, and you just spoke to that a little bit, right? The other part to it, Luch, is it's a mentality, right? It's a mental shift. And I think you had this sort of epiphany during the beginning of your career, and watching a lot of the traders that you were like kind of coming up with, and seeing how they assess the markets. It's separating yourself from any kind of public chatter around everything, right? Looking at everything with a skeptical perspective and basically not trusting anything that you read, right? So never ever thinking that that you read something on Twitter, that you look at something on CNBC or whatever, any sort of media, and thinking that that's something that you can take direct action on. Always having a layer of analysis in between that and saying, okay, if they are saying this, what would be the benefit of this? What would be the outcome of this? What moves would be made by the masses or by smart money in the situation? And how do I make money off of that? How do I separating yourself from the simple cause and effect of, oh, this, whatever, this analyst has talked up this stock, I should buy, right? And separating yourself and saying, okay, who is incentivized to make this go in this direction? And if that's their incentive, what might they be planning? What might they be doing? And how can I position myself accordingly to that?
Yes. So, what Charlie is saying is kind of putting you guys to action, right? So it's like, okay, I see all this happening, right? How do I position myself? I'll tell you what, the first thing you got to do is you got to calm the fuck down. Okay. I'm going to give you another example here. Okay. This is a cryptocurrency called XRP. How many of you guys trade the cryptocurrency out there, the Bitcoins, some of the other altcoins out there? CNBC came out and they wanted to teach everybody basically how to trade XRP. And they came out and said, how to invest in XRP. They did a whole segment on it, and it was around $2, $2 and change. I think it was closer to $3. And that was the fucking high, and that was the high. So CNBC was fighting cryptocurrency, the whole nine. I mean, Yahoo Finance it was only until later that they started inputting all of the data onto their platforms. Market Watch didn't even put the shit on there until after the first crash. Yahoo Finance was a little bit late. You had to go to specific cryptocurrency data sites like what's the big one? CoinMarketCap, right? Everybody went to CoinMarketCap. Their rankings on fucking Google went straight to #1 because the only place that you could get real-time data for freaking cryptocurrency was CoinMarketCap, and that was without having access to an exchange or without having your money in. So you could easily just go to CoinMarketCap. But again, for XRP, this was touted. You guys remember this? This was touted as the safer coin that the technology could easily be adapted by the banks of the world, right? There was even news that Jamie Dimon was looking at XRP as their entrance into the cryptocurrency world, right? And now where the fuck is that shit, right? This thing is worthless. This thing is worthless. And hasn't even done anything. The size, by the way, on this thing is absolutely ridiculous. So the float on this is way more, than a lot of the currencies put together. Okay, so that's XRP, and then you got Bitcoin, right? Then you got Bitcoin, which was even crazier. How many of you guys know who McAfee is? McAfee is sitting there on Twitter. This crazy bastard, though. McAfee is like, he's out of his fucking mind, man. The man's out of his mind.
Yeah.
What'd you say?
I said you got to respect it a little bit. I mean, it's just
absolutely
that in a public forum. There's some.
I love when he comes back out on Twitter and says, "Guys, I'm old. I don't know what I'm saying half the time." But then he says he's gonna eat his dick if Bitcoin is not $1 million by the end of fucking 2020. And
right.
Again, statements like this, it's obviously exaggerated a little bit, but you guys get the picture. If somebody is calling me that has never traded equities or never done anything in their life before when it comes to markets and secondary markets, and they're telling me, should I buy Bitcoin at 18,000? It's going to 100,000. Come on, man. You know the fucking right. Who are the people that are buying it up there? You know what I mean? Where is the demand coming from? If it's institutional, then it's very methodical. If it's an institutional buyer, shit is methodical. They're not out there painting the tape saying, give me 1 million shares of this shit right now, okay? They're not out there doing this shit. Why? Because It's not sustainable. How are you going to create an execution strategy off some shit like this? You know what I mean? This shit is not sustainable. Okay, but a lot of people just don't even put two and two together like that. So if you guys are going to play this game, if you guys are going to come rock with us too in the course, which I know you guys will, you got to start thinking differently. We need you guys to start thinking differently before you come into the class, because I don't want to have to run the class and smack the shit out of you every single second, because you just can't conceptualize this yet. Okay,
And
so these are just 3 examples here that we can continue throwing them at you here. But what you got, Charlie?
And I mean, one of the things that Tim, who is longtime part member of the Steam Room, just brought up, he said, Lucci, isn't it tougher to see the forest through the trees when you're trading every tick? Backing away for a few days really brings that clarity. And one of the things that Tim's hitting on with that comment is about giving yourself the opportunity to think clearly and to separate yourself from the noise. And that means you have to separate yourself from being immersed in this fucking flood of information that we do to ourselves all the time. If you are sitting, I don't care how disciplined you are as a human, if you are just constantly looking at Twitter, constantly looking at chat rooms, constantly watching CNBC, that information, that messaging is going to seep into your brain, into your subconscious biases, is going to affect your behavior. And one of the things that we always talk about in the Steam Room, that Lucci practices extremely well himself, is to be able to say, here are the sources of information that I'm going to anchor my analysis in. Tape, flow, like my own perspective when I haven't looked at the market in 3 days, and I come back and I'm assessing everything and all the hype with fresh eyes. So when you've identified the things that you can really rely on, the sources of information you can rely on and anchor yourself in, and you have stopped exposing yourself on a nonstop basis to sources of noise, it will help you see the noise much more clearly and hear it much more clearly and trade off of it much more nimbly.
Right, right. Charlie, go ahead and add your video here. We can't we can't see you here. We want to see your lovely face here, buddy. There he is. There he is. So what Charlie is also talking about too, it's gonna overlap a little into Law 3, and you can kind of see like we overlap a little bit. Law 1, Law 2, Law 3. These all have to do with each other, and they all kind of flow. They flow in and out. They flow in and out, and you just have to learn to look at the market from this particular perspective. So what I'm saying is that Charlie here is kind of throwing out little tidbits of Law 3 right here. If there's too much noise, it doesn't matter how strong you are. It doesn't matter. I've seen the most mentally tough people lose it, completely lose it, when they're allowing all of this information to cloud their judgment, when they're allowing all of this, the sentiment out there, all of the stories, all of the hype, to influence their decisions. And let me go ahead and ask you guys, how many of you guys have based your trading decisions on sentiment, let's just say, or changed your decisions just based solely off what you read on Twitter? It might have been one tweet. It might have been one tweet from somebody who you may respect, maybe even a little bit. And tell me if you guys have thrown away your ideas, your whatever it is that you were planning on going for. How many of you guys have done this? You guys are all guilty of this. And when I say you guys, I'm including myself. We are all guilty of this, okay? But why? What the fuck does this man know that I don't know? He got access to the same information that I do. It's a damn market here. There's a buyer and a seller to this shit. May the best man win, baby. I got my information, you got yours. Who gives a shit? Okay? But when it's so much out there, when there's so much misinformation out there, how do you fucking process it? And this is going to overlap into Law 3 with knowing what your strategy is, knowing yourself, and how do you start tuning out that noise. But the first thing you got to realize is, how does the media push that hype? And then what are their incentives? Charlie and I were also talking about what are their incentives. They want likes, man. They want likes. Everybody out here just want likes, okay? That's it. They're in the business of selling hype because it's good business for them and it draws traffic. That's it.
They want traffic and they want your eyeballs. I mean, think about for a second what the world would be like, what financial news media would be like if they were actually incentivized by the profits that they helped you generate in your trading.
Right.
Think about how different the world would be in terms of the information that they put out and how quickly they put it out and the hysteria that they generate around it. But and that's like a laughable thought experiment, and yet traders sit there and steep themselves in this noise every day, and they think that it won't cause them to make decisions that will have a negative impact on their account. They're taking in information from people who have zero incentive to help them make money. Zero. They don't. CNBC doesn't give a shit if you make money or not. That is literally not at all what their business is about. And yet you're taking in all that information, you're making decisions based on that, consciously or subconsciously, and that behavior is in question, right? And so that's what we're prompting and pushing you guys to do and to question, is to create a separation and to identify the sources of information, whether it's being in the room and tape, of course, someone like, Lucci, who's an analysis that you feel like you can put into a filter, you can trust to a certain degree. Identify those sources of information, listen to those, and then be able to look at all the other noise and say, I can see this for what it is. I can see how it's going to push people into a certain trade, rather than just letting it seep into your, consciousness and steer you.
Right.
Does this make sense, guys?
We'll end this actually with a quick discussion on earnings, because considering this is something that everybody is very active trading as well. Something as simple as a great earnings report but a bad reaction. How many of you guys have thrown money at a situation where you couldn't comprehend how the street reacted to a great earnings report, and you ended up losing money on the call side or on the long side, and you were convinced that, hey man, this company had great earnings, how come I'm not, why isn't it going up, right? And we continue to fight the tape for the unpromised gems and the bullshit of what we see in the media. We continue to just throw away what we're looking at, right? So it could be something as simple as the stock was already bought up. I mean, if a BYND or a TLRY is priced at 100 times earnings and it has the greatest earnings report ever, who gives a shit? It's still only worth fucking 10% of what it's valued at. Okay, but you don't think like that. You think, damn, that shit was good. How come I'm not at the Gucci store buying those 2 fucking mannequins here? Your interest, and again, it's just misaligned right here. So this is going to flow real good into Law 3, because you also have to analyze your own attachments. Why are you so attached to the media? Why are you so attached to Twitter? Why are you so attached to the guru that you follow or to the chat room that you follow? Why are you attached? Have you ever asked yourself that question? Most of you people haven't. So that's step 1 here.
Right. And so guys, we're going to go, what Lucci's talking about next week is kind of the culmination of all this. And I think really where we've especially been putting a lot of attention recently in the last year or so, because it's feedback that we get from everybody in terms of what moves the needle most, and that's the psychology of it. Knowing yourself. That's law number 3. That's Tuesday of next week. We'll be back for that. Also, don't miss Thursday. We're bringing on Ron Friedman from the chat, guest educator for the master course coming up. He's gonna be talking about his long-term option strategies that he uses, how he's combined tape with what Lucci does, kind of roping in his version of the 3 laws of trading into this. That'll be really cool on Thursday.
Let's take some questions.
Yeah, let's get some Q&A from you guys. Before we hop into Q&A, be aware, next master course starts August 12th. That's the next live session. Lucci teaching 12 live sessions, 3 nights a week for 4 weeks, and then you get the 4 live tape reading sessions. We've also, like we said, got the sorry, am I showing my screen here? Yep. We've got Ranchero coming in, doing his guest courses, guest classes about his writing strategy and how he combines a lot of what Lucci taught him into really long-term position management, building up a portfolio of income-generating positions while kind of incorporating tape into that, how he uses flow. You get a free month of the steam room. and a whole bunch of other stuff. Check it out. You can get a very steep discount on that if you go to 3ltplaybook.com. If you go through this playbook, and it doesn't take that long, and it's totally worth your time. Go through the playbook. If you get to the end, you can get a very steep discount on the master course. So if anybody hits us up asking for discounts, we're gonna slap you. Just go in the playbook, and you can get it. All right. All right. Let's take some questions. What do we got
Got some
here?
good ones. Yeah, we got some good ones.
All right.
Guys, anybody else with some questions? Go ahead and throw them in there. Me and Charlie are gonna take them one by one. Hopefully, we can get to all of you guys.
Right. All right. This is a good one from Kashik. I'm probably butchering that, man. My bad. But I think Kashik. When you read tape on options, how do you separate out the real volume towards the trend from all the noise?
Okay.
That sounds like it could be a whole 45-minute lecture, but you know.
Yeah. So I'm actually going to give you like a couple sentences, and then you can take the course like everybody else. So let me hold on. Let me read this one again. When you read tape on options, how do you separate out the real volume towards the trend from all the noise? I mean, again, this comes with skilled tape reading, right? So this comes with, you have to have an intent, right, for reading tape to begin with. That's one thing that we also teach as well. Most of you guys are just like, it's similar to getting data for options flow. So let's say you go ahead and get your own data for options flow, and you're like, you know what, screw Wall Street, Jesus, screw all these guys out here. I'm going to do this shit myself, right? You go into a platform, and you start to realize there's a feed of God knows what back there, right? You have no idea how to make sense out of it. There's millions of options trades every single day, okay? And to look at each one of these would be literally shooting your own self in the foot and making sure your brokerage account goes to zero, because you can't follow the shit like that, right? So how do you know which ones to look at and which ones to not look at, right? It takes somebody like a Wall Street Jesus to come by who sat here and looked at all this shit and said, okay, this is useless, this is useless, this is useless, and this is useless, okay? Because there's only so many actionable trades that we're going to see, okay? And the reason why he tags what he tags, you guys will see when you come into the steam room, okay? These are like aggressive order flow that, you know, has some momentum to it. Therefore, we can go ahead and trade it. Something nice and simple. So you got to zero it down with an intent. What is the intent? Why are you looking at the tape in the first place? So Kaushik, if it's literally just, you know, let's say you're on the call side of something, and you know, you're looking at the stock is gradually moving higher. You're looking at the actual order flow that comes out on the tape of that option. But there's tons of other flow out there that is betting against it. You might see some put activity. You might see some big orders on the bid. How do you sit there and look through all of it? Well, my friend, that's what the class is for. That's exactly what the course is for. You know what I'm saying? We teach you how to read this shit and how to look at and how to prove a theory. We teach you how to prove a theory and a thesis. And if the shit is not proven, get the fuck out. Get the fuck out and keep it moving, or wait until that tape starts to support your thesis. But again, it all starts with an intent. It has to start with an intent. You got to know what the fuck you're looking for in the first place. So, you know, there's a lot of different ways to answer this question. The best way to answer it is get your ass in the course.
Bob, this is a good question, and it's kind of impossible to answer, but do emotions cause the price movement, or does price cause the emotions?
Woo! Okay, so we got to
like
put this dude in the Slack. We got to put this dude in the Slack group and have a philosophical conversation. You know, there's people that would argue both sides of this, and there's also people that would say, you know, it depends. There would be a lot of people that say it depends on the type of scenario. Okay, and Tim here is saying chicken and the egg. You know, so you could throw that out as an answer to, you know, this particular issue as well. When you're looking at most types of tape, for me, it is an emotional situation. I'm looking for the emotion. And the reason why I'm looking for the emotion is because that's where the payday is. That's always where the payday is. Because where the emotion is the highest, that means the most amount of people are trapped on the wrong side of the fucking trade. And that means when these people have no choice but to react, they all react the same way, and the force of that move in the opposite direction or whatever the hell it's going to go, that's going to be the real momentum. Therefore, when I pay for an out of the money fucking option that is worthless, that is always worthless and worth absolutely fucking nothing, it's worth the risk because the juice is there. The emotions are there. Okay? So that's the place that I live. All right? But again, this is a philosophical question. You know, so we could argue this for a long while. I love this question though. We got to get this guy in the Slack so we can just sit there and shoot it out.
Right. Steve says, what was your biggest mistake that you fixed that allowed you to level up your trading?
Law number three. Law number three. That's it. All of that shit. Any question that is backed on this is law number three all day. Law number three all day. Law number one, I'm going to teach you. You guys are going to have the confidence. You guys are going to know how to trade the market. That ain't going to be the problem, okay? It's difficult to get there. Law number one is going to take you time and fucking effort, okay? And some pain, sure. But law number three is everything. Everything, all the golden nuggets that you want to find are in law number three. Now, it's not like a nugget that I'm going to just sit there and throw at you and you have it. It's not like a fucking video game. You pass level one and then you get to level, it doesn't work like that. This is your soul you're talking about. This is your brain you're talking about. Okay? So, you know, that's law number three. So once you get the confidence, law number three is all you're going to be working on. You're just going to be working on yourself. You're going to be working on how do I obtain the best version of myself. So all the aha moments were law number three.
Well said. And that's what we're going into Tuesday next week, guys. So come back for that. I mean, Nathan, you're asking a question about like what reasonable expectations for a good trader, a professional trader, like what kind of percentage returns can you see on an annual basis? How much can you expect to make doing this? Again, I think that's pretty much an impossible thing to answer.
Charlie, you've seen a lot of traders come and go. I mean, what's the average on all the people you've seen come and go?
I mean, the average is the most people lose money. Obviously, the average is an extremely difficult thing.
Yeah,
to
the
do.
skew, right? It fucks up the skew real badly. So anybody who's making money, that fucks up the skew completely.
Right. I mean, but Nathan, you're talking about, okay, well, what percentage can I expect? Well, it's like, how much you trading on? You know all the variables that go into this. I think it is very tempting for people to say, to build up an expectation and an attachment to a certain kind of outcome. And I know that's not the answer that you want, but I genuinely think it's the worst thing that you can do in your trading. In part, not only because it will distract you and it could cause you to try and make decisions and try and hit that number when the markets really aren't giving you that opportunity, but it can also limit you immensely, which is something we don't really talk about that much. You start getting in your head that you're a $120,000 a year trader, right? And that's the kind of size that you do. You could have had a year where you made $1 million. It's possible, but you're getting yourself into a fixed mentality, a fixed perspective. But I think the moment that you come to the markets with an expectation and you expect that to be fulfilled, that's the moment you just get kicked in the nuts over and over. That's my answer. Luch, what do you?
I mean, this is law number three. This is you haven't even started law number three. If you're asking this question, you haven't even started law number three, which is further proof you need to take this fucking course anyway. Okay? So my answer to this question is I could throw out all the expectation that I've ever put on my own trading since I started. Okay, I had the expectation of making $1,000 a month. I had the expectation of making $4,000 a month at the time because that's what my expenses were. I had the expectation after starting making money to make $1 million a year. I kept going. It kept going. It kept going. It kept going. But in nowhere does it factor for law number three, how fucked up your brain is and how much you impede your own progress. Okay, so you can sit here and talk about prop firms. Guess what? I've been there. You can sit here and talk about hedge funds. I've been there. You can sit here and talk about just retail trading on an E-Trade account. I've been there. Okay. So creating these expectations is what's going to destroy you. But you don't want to hear that because you haven't started law number 3 yet. You haven't even started going in. You're still looking out at, hey, what can the market do for me? Guess what? This ain't UPS, motherfucker. This is not what can Brown do for you. Okay? The market doesn't give a fucking flying fuck about you, bro. Doesn't even know your name, and it will never know your name. Okay?
And
So
Nathan, you're asking, I mean, you gave the example of you had a $20,000 account, like, what could you do? I mean, one of the things that we definitely see is traders putting way too much pressure on themselves at the beginning. You have to give yourself runway to be able to make some mistakes. If you are trading $20,000 and in order to pay your bills, you have to make $5,000 a month on that account, that is not the environment that you want to be in if you're just learning how to do this. What we always say is you want at least, like, if you're not going to be working while you're trading, you want to have at least, what do we say, Luch, 6 months of monthly expenses saved up.
At this point, you want more than that, because even when you're hot, even when you're hot and you think you can never fall, that's actually the point where you will. So even if you're year 6 in, you're making consistent money, you can still fall because of something that happens in your life that just throws you out of whack. And it could just be a couple bad decisions here that toss you into into a downward spiral. So Nathan, again, we're not shitting. You got to realize here, Charlie and I are tasked with the business of helping a lot of you guys, especially you, Nathan, of helping you find yourself. Now, this is a shitty job. Nobody wants this job because for most people, it's a waste of time. It's a waste of time. You ain't gonna change yourself. You're stuck on whatever you're stuck on. You're stuck on your expectations. Why? But we go ahead and we enjoy this undertaking because it allows us to vent as well, right? We get to smack the shit out of you, and it actually does make us feel somewhat okay. Okay, it does make us feel like we're doing something of value here, right? We're imparting this wisdom upon all these people who need it. Nathan here is a perfect example. And there's so many of them just like you guys, okay? And just like where I was, and just like where sometimes I still am. We all have to teach ourselves. We all have to learn together. We all have to understand how our brain works, how our mind works, why all these emotions start pulling us in all these different directions. Charlie and I made a business out of this. It ain't pretty. It ain't pretty because there's a lot of disappointment out there. Okay? So Nathan, try to have some foresight here and listen to some folks who have been exactly where you are and have been exactly where you're trying to go. You know what I'm saying?
It's about the best you can do. All right, let's do last question here, guys. From Sunny, is this style mostly for swing trading or day trading? Must take time to build a picture of what's going on.
Yeah. So, I mean, again, like tape is for everything. Tape is for, and again, tape is not only for the stock market. Like you can even use this shit in any secondary market that you guys look at. Tape is buyers and sellers. So whether you're looking at a swing, a swing trade, or whether you're looking at scalp trades, whether you're looking at crypto, this and this and that, tape is very applicable. Okay. Law number 2, media. It's applicable to every single. It doesn't matter what. It doesn't matter what. Law number 3, it's applicable to everything, and it's not only applicable to the stock market, but it has the most application to your fucking life, to your life, and how you choose to live your life. That's law number 3. So as far as what you're going to get here, dude, come on.
All right, we'll end it on that, guys. If you have more questions, feel free to email me, charlie@sanglucci.com. We'll make sure they get answered. Check us out on Thursday with Ranchero. That is going to be a great webinar, going into a different perspective on all this stuff. And then Tuesday, coming back with the final episode in this series on going into law number 3, the psychology of it, the stuff that we get most excited to talk about. And check out www.3ltplaybook.com if you haven't already done that. If you guys want a deal on the master course, check that out. It starts August 12th. All right, guys. Talk to you soon.
Later.